Hey everybody, welcome back to Florida Stacker on YouTube. Today I've got Lior Gantz back on the channel, and we're going to talk about what's going on with gold. We're going to talk about what's going on with the latest CPI read, 3%. Is that real? And most importantly, we're going to talk about CBDCs and what's really driving the hype around CBDCs as we prepare for them to really begin to impact our life. Lior, how you doing today?
Doing good. How you doing?
Thanks for coming on the channel again. So what's going on in the world? I know you follow everything financially speaking with the economy very closely. And I think it was pretty big news last week that CPI showed only a 3% year over year gain, which was the lowest print we've seen in, I think, a couple of years now.
27 months, yeah.
What's going on, Lior? What's really happening here?
So CPI, as you know, doesn't include all of the day-to-day items that people really care about. So it's more of a barometer for Wall Street and the investment world, which is important for the everyday person indirectly. And it's coming down. So there's no denying it. It's trending down for months and months. It is the lowest read in 27 months now, so just over 2 years. And it looks like what we're seeing is the impacts of reopening have started to dissipate. So anything that has to do with supply chain bottlenecks, freight, shipping, etc., we are moving away from a world where it's hard to get stuff moved and hauled around. That's one thing that's really helping CPI. The second thing that's helping CPI is that companies have done a lot of thinking of how to make sure that they have stuff in advance. And therefore, in 2022, they overbought and had a lot of merchandise that sits on in storage. And now they're able to roll it out. So prices are coming down because they have to clear a lot of products off the shelves. So that's secondly. And third, interest rates have worked to slow down housing dramatically. And that's, as you know, that's a primary industry in most countries.
Yes.
And that's very interest rate sensitive. So that's number three. And number four, money market accounts. So what's funny about money market accounts is the retail or the average person moving his money out of banks and into money market accounts is actually what is driving the lack of liquidity for the average person in the banking system. Because as you know, banks can lend according to their deposits, and if you have a rush out of deposits, it means that banks have to have less to lend. So it's kind of a virtuous circle that's happening in the economy, and it's putting strain on the Fed to do something else besides raising rates. So all of these things combined have dramatically lowered inflation, and you know the cherry on top is that consumer behavior has changed, and that is because most people, basically opposite to their thinking in 2021, where they were able to just quit their jobs and find another one quickly. The second layer of what's driving the Fed, which is the jobs report, is stabilizing. So salaries are not spiraling up. It's not like you can just quit and demand more. That's I wouldn't say it ended, but on a general national sense, and definitely on an international sense, it's not the main thing it's not the main driver. People are certainly employed and you can find a work, but the leverage that the employee had over the employer has shifted back to more normal. So and that's driving your spending habits. If you no longer are extrapolating that, hey, next year my job will pay much more, or my stock option compensation will be worth more, then you're spending less. So you're spending less, plus your mortgage is up, and your everyday items are up, and so inflation is coming down. And at some point, it will be the Fed that announces some sort of a victory over this, and that will be where you will start seeing the new normal. It looks like, from everything that I'm seeing, that this upcoming meeting, the July 26th meeting, will be the last rate hike.
Okay, so you do foresee another, what do you think, about a quarter, half basis point increase coming up soon? Okay, a quarter point. Then,
if it doesn't happen, then the only reason not to raise rates by another quarter percentage, because it's already 93% of bond traders believe that the Fed is going to raise. So the only reason that the Fed would not raise is to claim victory over inflation in a major way, and I don't think that that's what they want to do. Certainly not as we are approaching an election year, and they don't want to be appearing as meddling. So I do see another. I do see that what they'll say is the above. They'll say we're raising by another quarter percentage because we can't risk this. Inflation is trending down. It's all beautiful. We do see a lot of progress, but there's still work to be done, et cetera, et cetera. We'll raise by another quarter, and then we'll continue on a month-to-month basis to monitor the situation. And I think that they will just continue to monitor it. I think it will stay at these levels until either something breaks, bigger than what we saw with SVB, so bigger than a regional bank going under. It needs to be something dramatic, such as a housing bankruptcy, avalanche.
Yeah, something like 2008 or huge like that. Or?
We won't see something like 2008. There's no we don't have nearly as much leverage or bad loans, but we can see the stress in obviously in office buildings and commercial, and there's a lot of debt to be recycled in 90 days from now in September. So, my opinion, they won't do anything after July, but until the end of the year. In other words, rates will stay paused at 525 to 550. But if we do see in September a lot of distress, then I think that they will implement some sort of programs that are not cutting rates but helping recycle debt. So all sorts of emergency programs that they can run, where the public is not familiar with them, but they run on the back end, just like they have a few of them running right now to help the regional banks, and nobody talks about them.
Yeah. Well, so I guess my main question for you then, Lior, is let's say we get this quarter interest rate hike, but typically it's what they say about going forward that really drives the market. So they're forward-looking statements. So you feel that we'll see this little hike, but it probably won't do much because the market's really going to be looking ahead. And if the notes that we're hearing are going to be, we're going to hold steady and evaluate, do you think that really changes much in the market at first? Is there a rally? Do things sell off, or is it just business as usual on a draw like this?
I think that what the market really wants to know is what the Fed thinks about jobs and not about the CPI, because CPI is kind of sort of conquered. CPI is trending down. That's good. But the jobs market is where it's up in the air. And the main reason for this, by the way, is because during the shutdowns, people left their jobs in the service sector, moved to the goods sector, because people needed goods delivered to their house, furniture, home equipment, office equipment, everything. And to draw people back to the service economy, which is most of what the United States economy has been very problematic, because these people that worked here didn't want to migrate again. One, because of job security, and two, because they just got retrained. And you had a mass retirement of baby boomers. So the pool of workers, the participation level in the economy dropped as well. And that means less available workers, higher salaries. So between those two things, a lot of retirees and a lot of people that moved from services to goods and now don't want to come back to services. This part of the economy, the services economy, is still experiencing tightness, and it's still experiencing more job openings than people are able to fill those jobs, and that's what the market really is interested in at this point. He calls it. He breaks down inflation to three, and he says that they've mostly, for the most part, the first part, which is the supply chain, they've been, the economy's moved on from there. Then there's the real estate part. There's good things happening there in terms of the confidence that people have. Hey, definitely buy a house because things are going to get more expensive in the future. That's gone. So we are moving back to more of a normalized real estate market. It's now actually on the other side of it. It's frozen. So that's the main problem now. It's become from too hot to too cold. And the reason that they can't do anything yet with real estate is because of the services. If they get this right, or if they at least acknowledge that they're turning a corner on this, then I think that banks will start to relax lending standards again, and real estate can come back from too cold into normal, and that's really good. And then we're on the way to recovery. Then we're recovering, and recovery actually counterintuitively means a bear market for the dollar, and that's why this jobs market that we had, the jobs report plus the CPI, sparked a huge bounce in gold and in silver, because if we are recovering, then money can flow back from money market accounts into the banking system, and we can start lending again and opening up, and that means that you don't have to hoard dollars, and that is that is part of a dollar bear market, and certainly that's the next stage here. We are entering a dollar bear market.
So, Lior, if the dollar continues to weaken, most of my viewers, as you know, are stackers of physical precious metals, or they invest in the mining companies, royalty companies. So what do you see happening for the next 3 to 6 months? Will the dollar continue to weaken and we see increasing spot prices for our precious metals?
Let's first see what happens in the July 26th meeting. That is really important. Yeah, that's really important because, for one, if you, I don't know if you've read a report on U.S. policy, U.S. foreign policy in the Middle East, but it plays right into the big picture of the dollar. So definitely check out wealthresearchgroup.com/USA/Saudi and /petrol, because those three things, the U.S. foreign policy in the Middle East, the Saudi reaction to the lure of working with the Chinese, and how this all marries into the Russia-Ukraine conflict, these all impact the relevancy of the dollar. There are three major things that are going on, and I'm going to get into them in shortly. But just if you want this in a more methodical manner, each of these are 6 to 7 minute reads that you can immediately get updated on what's going on right now. I am in the Middle East myself, so I can tell you from first account what's happening here. So those are the /USA and /Saudi, and I think that people should read /petrol. By the way, because Iran is on the verge of going nuclear, I also think that people should really pay attention to Iran. So we wrote 2 reports on that. I'm sorry for blabbering out these reports, but I think that these are really important because in months from now they could have 2 nukes done.
So it's huge.
That's
really bad, but huge.
It's a game changer in the Middle East. So definitely check out wealthresearchgroup.com/Iran and /Iran2 which are companion reports about what's happening right now with Iran and the Middle East, because these are all major forex updates that have to do with the dollar.
Okay.
First of all, in the last 2 years, we've seen the weaponization of the dollar to a larger extent than we've ever seen. There are now 40 nations that have some sort of sanctions, banking sanctions or otherwise, through the SWIFT system and through other reconciliation settlement systems that Washington is implementing. So if you think about it, 40 countries, that's 20% of the world's countries are on some sort of a punishment routine with the dollar.
Oh,
and that has made 2022 the largest ever purchase program for central banks buying gold. They've never bought more gold in one calendar year than 2022.
Yeah.
That is because of sanctions. If a country like Russia, as large as Russia, can see a $370 billion account frozen for more than a year by the government of the United States, that tells you the risk that other countries are running.
Oh, yeah.
So that's one thing, the weaponization of the dollar. That makes it less relevant as a reliable reserve currency, because the number one thing for a reserve currency is rule of law. That's the reason that the yuan doesn't serve as a reserve currency or is anywhere close to being a reserve currency, because the Chinese government can wake up tomorrow and do whatever it wants.
Right.
Okay, so that's one thing. So I don't think the yuan is going to dethrone the US dollar. The US dollar is just going to get less relevant.
Yeah.
But there's no real substitute for the moment.
So just to make my audience clear here real quickly, or before we move on, all the articles that Lior mentioned, I will have down in the video description section. So at the end of this video, you can just go down there and check out all these links. Great information, as mentioned, 6-7 minute reads, but it'll keep you posted, especially on the things impacting the dollar. And as you know, the dollar drives precious metal prices. So very important stuff to stay on top of if you want to be an informed precious metals investor. So thank you, Lior. Just wanted to get that in there because I've read plenty of your articles and they're very informative. So I want to make sure everyone knows where to go to find those.
Thank you. Yeah. So the weaponization is one. And then secondly, it's the Saudi diversification that really concerns people that are,
What are the Saudis diversified, like dollar and yuan holdings or?
Correct. So the petrodollar system is essentially the system that Kissinger and Nixon concocted once Nixon closed the gold window, in order to make the dollar the most important currency after being detached from gold. The formation of the petrodollar is to the effect of the Saudis provide cheap, reliable, and consistent supply of oil to America and its allies. And in exchange, the United States Navy patrols the oceans and guarantees freedom of passage to the Saudis, and of course, protection from its arch enemies in the Gulf. So that is the petrodollar system.
Mm-hmm.
Yeah, Iran predominantly, but other countries could have risen up if the Navy was there.
Yep.
In 2011, when the shale revolution began, the United States no longer needed Afghanistan, Iraq, Saudi Arabia. They no longer needed them to provide for their energy needs. And the more we progressed, the more this became abundant, that America has all of its energy needs secured if it chose to, forgo crazy ESG limitations and let the oil industry just run. And we are there. So in 2016, once Trump got elected, and certainly in 2018, once he made his UN speech, the world realized, and the Saudis definitely realized, that the United States is not going to permanently defend them, and that they need to find a new sugar daddy. And that's what they're trying to do. They're trying to understand how the world looks like when the American presence in the Middle East takes a backseat to their focus on the South China Sea, which is happening right now. So
yes,
what Trump tried to do is avoid a vacuum situation, right? When you pull out and then either the Chinese or the Russians immediately take the place of the United States in the Middle East.
We saw that in Syria.
Correct.
Yep.
So in order to avoid that, he drafted the Abraham Accords, creating some sort of a normalization and relaxation of tensions between countries in the Middle East and Northern Africa, etc. But that's not enough to satisfy the Saudis, because, as you know, Iran has attacked them, and the United States did nothing. So in that world, the Saudis need a hedge, and that hedge is China. And they've worked with them now to sell them oil, to sell government to the Chinese government oil settled in yuan.
Wow.
And that's basically, a big,
that's big.
That's big.
Change precedent.
Now Argentina does it as well. They transact in yuan. Brazil transacts in yuan. Other countries will follow suit, and it looks like, from a geopolitical stance, African nations, of course, deal with yuan. It looks from a geopolitical stance that there's a creation of two blocks here that are forming. Countries that have more allegiance to the United States and want to transact in the dollar, and countries that are betting on the Chinese and have more vested interest with them, and they will transact more in the yuan. So we're not, in my opinion, we're moving into a world where there's going to be two main reserve currencies, and perhaps some sort of a conversion rate between them, either fixed or free floating. So that move away from the petrodollar, that's obviously very bearish for the dollar.
Yep.
And of course, if the Fed is done raising rates, lower rates are, of course, going to weaken the allure and the attraction of holding U.S.
money
debt.
Markets and stuff. Yep.
Yeah. So that's third. And fourth, I think that something that's interesting that's happening around the world, and we need to pay attention to it, is that there's a growing descent by the emerging markets to use the dollar, because the dollar really hampered growth for emerging markets in the past decade, in the 2010s, and during the pandemic, where they couldn't get enough dollars to run their economy. There was a shortage of dollars, and therefore they want to diversify out of the dollar. To them, they look at it this way. They say, okay, we buy U.S. debt, the U.S. continues to flourish, and we get nothing in return for our U.S. debt. We buy the debt, and they continue to inflate their currency supply.
Right.
So those four things are really driving this dollar bear market. Now, you asked about the next 3 to 6 months. I don't know to give it in that time frame, but what I want to tell you is you should watch the DXY index, because it just dropped below 100.
Oh, okay.
And the main keys for it are 96, 92, and 90. 96 is a big one. I think that if it reaches 96, silver will start rallying big, like above 30. If it reaches 92, I think that the gold will be at an all-time high. And I think if it reaches 90, then silver will be above 45. So
those are big numbers.
Well, it's a big move also for the US dollar. So
it is.
Watch the DXY index on a daily basis. Just look at it once a day to see what's happening. If it drops below 90, then I think that silver has a real chance of hitting a new all-time high. And towards the 80, and this is 3-4 years out, I think that silver can start to top around the 60-65 an ounce.
Those are incredible numbers to think about. we've got a long way to go to get there, but we're headed in
It's
that
just
direction.
over double.
Yeah.
It's not a lot for silver.
It's happened in my lifetime, and I'm in my 40s. I've seen silver go up over $50 before. So we're in this dollar bear market, Lior. You've kind of given us some
just starting,
just beginning. So what does this new change mean for CBDCs and CBDC rollouts here in the United States and other Western nations?
Yeah, CBDC is a huge topic. In fact, it's so big that Robert Kennedy Jr., when he announced his run for president, his first order of business, his first campaign promise was that under his watch, you will have no CBDCs in America. Yeah, okay. Well, so first of all, who frames who creates the framework for CBDCs? Where are the thinking groups for CBDCs? They start at the very, very, very top of banking, and that is in Basel, Switzerland, where the Bank of International Settlements is headquartered, and it to a degree IMF, which is a U.S.-centric institution. Those are the two main Western institutions that build the framework. Then you have the four big central banks: the Fed, the Bank of England, the ECB, the European Central Bank, and the BOJ, which is the Bank of Japan.
Yep.
Outside of those, you have the central bank, the People's Bank of China. So those five, along with those two more global banking institutions, those will create the framework for CBDCs. And I have read everything that they have published so far on CBDCs, including watching every debate and academic explanation of their reports issued by them.
Right. Yeah.
So first of all, if you want to be up to date on everything, it's a 3-step program.
Okay.
The first two is go to wealthresearchgroup.com/CBDC. That's the first report. CBDC 2 is the second report. And what I'm about to say now is what has happened in the last month. So these three combined will give you everything, literally everything you need to know about CBDCs. You will not miss any thing that's happening around the world if you read those two and listen to these updates. The BIS, which is the Bank of International Settlements, which was created, by the way, by JP Morgan and three other bankers during the 30s, after World War I, when the international system was starting to favor America more than any other country, and it just issued a report called "The Future of Money." So it can't get any bigger than that.
That sounds like an interesting report to read.
Correct, and who put it out is the head of research. So it's coming straight from the person that is in charge of understanding where the banking sector is going towards. And he's a very smart person, which these researchers, they're not politicians, they're not elected officials. These are career economists or
bankers.
Yes, they're bankers, but they're very specialized bankers. His day is more comprised of research than of
transactions.
He's not trying to make a profit. He's literally a career researcher. So, the world is moving towards tokenization. That is the bottom line of how the next 10 to 20 years would look like. Tokenization is a manner in which transactions are settled with a smart contract involved in them.
Okay.
And that's the mechanical part. Now,
sounds like crypto.
There is a cryptographic layer, of course, because a smart contract needs a layer of cybersecurity around it.
Right.
And that will be a cryptographic layer. But what's more important is how it gets settled. For it to get settled, the Bank of International Settlements has created a new term called the singleness of money. And what they mean by that is that if you use a stable coin, which is supposed to mimic the value of the underlying security, there is a problem where on many occasions it does not.
I've seen that. I'm an investor in cryptocurrency. I've seen USDT, USDC depeg from their dollar backing.
Correct.
And lose value.
Exactly. And as nations, you cannot transact that way. You need what's called a singleness of money. When you buy weapons from one another, oil from one another, other major projects and services between countries, you need this single unit of account, a monetary unit of account to settle. And that's where they are talking about CBDCs. So those are for the back end of the financial system. Those are not for your and my use as the average person.
Okay, so for settlements right now, and not so much for commerce between individuals.
Correct. Those are called wholesale CBDCs, and they are beneficial for countries. For example, between first world and second world, third world countries, where you've seen a lot of debt created in the first world, where there's a loan extended to a third world countries, and then the third world country cannot pay it back, and then there's an IMF in the middle, and all sorts of problems. And with a smart contract, you can alleviate a lot of these by creating stations along the way, where hey, you want us to fund your new airport? Okay, well, here's the first installment, here's the second one, here's the third one, and now it becomes less political and more tokenized. So that's on the back end of the system. Settlements between banks done with smart contracts, they are more instantaneous. They create less friction, less intermediaries. They're more cost effective. All the benefits of the cryptocurrency revolution.
Yeah, I can send payments in Bitcoin in under 30 minutes, and there's coins now that are almost instantaneous across the world. It's crazy.
Correct. Yeah. And that, what you just said, is what central banks and governments fear that will happen if they don't enter into the realm of retail.
They're going to lose control. That's what they're worried about.
Either that, there's two concerns. One is more cases like FTX, where money goes to heaven, for many people. So that's one thing. From that perspective, they don't want to see too much power over currency at the exchange level. So that's concern number one. Secondly, they have a monopoly over a currency, and they don't want to see that going away. So that's from the other side, from not letting people be too decentralized. And you can obviously disagree with that, et cetera, et cetera. But my point is not to tell you what's right or wrong. I'm trying to tell you what's happening, so you can prepare and make
absolutely
decisions. Retail CBDCs are central bank digital currency that is issued directly by the central bank, and therefore money, your money, is now with a custodian that is a quasi-government entity, and in some cases, with some countries, it's full-on a government entity. So you're giving your money away to the government. In China, of course, that's exactly what the government wants.
Of course they do.
They can shut you down whenever they want. They can ban you, hold you. They can, exactly. They can. The social credit system, you can. You didn't throw your garbage into the can. You got 1 yuan is dropped in your. You don't even know. It's already a line. A liability. So keep that in mind. Some countries that are not freedom loving and are way more authoritarian, they can abuse that.
Absolutely.
Countries that are more Western, in order to abuse that, they either need to legislate very draconian rules, or they need to override rules and go somehow straight to doing stuff that they should get legislative power for, but are not. So that's the fear, right? That's the fear. The fear is double. One, privacy. Secondly,
Yes.
the fear that you can suffer, like for example, the truckers in Canada, where they were told if your truck is in this protest, then your corporate account will be frozen. No, literally,
They did
that's
that. They really did do that, didn't they, in Canada?
Correct. Yeah.
Crazy. Yeah.
Yeah.
Yep.
So that's a first world country that gave precedence to that sort of sanction. Now there are Scandinavian countries where if you park in the wrong location, then they don't send you a ticket to pay. They literally take the money out of your bank account instantaneously.
No, thank you.
And if you're Scandinavian watching this and this is not true anymore, or there's any updates on that, please comment on the comment.
Yeah, let us know.
Yes, let us know. But to my knowledge, that's going on. Okay. So where do we stand with this? First of all, central banks are aware that half of the population hates them, and can't stand the idea of the government looking into your bank account.
More control, less privacy. Yep.
Yes. So the Bank of International Settlements knows this. And just like in Bug Story, we are the ants and we're way more than them. So
they're the crickets or the grasshoppers. Is that what's going on?
There is a fear, and a legitimate fear. Just like any authority has the fear that the people will revolt. So if they roll out the CBDC and it's not accepted by half the population, and half the population goes to the ATM and you have a run on the bank, that's not good.
No.
So retail CBDCs will be rolled out very slowly, incrementally. And I think that they will accompany paper money and other forms of currency, that they will not do away with the other forms. So that's another thing that the BIS is talking about. And not just the BIS. Many central banks talk about the fear that this gets rejected by a large part of the population. And now you have almost two economies. So you don't want that.
No.
Okay. So that's that. Now regarding privacy and security. First of all, what they're talking about is creating some sort of a private intermediary between them and you. That means that the commercial banks can stand there, and between you and the government, they can come in and create another layer of cryptography.
A middle layer.
Yes, a middle layer. So that's another important factor to this. But the benefits of it are incredible in terms of what can happen to you. Because, for example, right now, if you stack gold, it's very hard to collateralize that gold. If you go to the bank now and say, look, I have like 150 ounces of gold. I have like $500,000 in gold here. Why don't you extend a loan to me? Why don't we tokenize my gold? You have it as collateral, and I want a loan for my new house.
Interesting.
And in the new world that we're entering, you can tokenize things, and tokenization will help people that have hard assets, real estate, etc., tokenize that asset, and without even depositing it, just by collateralizing it and creating a smart contract around it, then you can get more access to the system. So that's part of the beauty of where this is going. And the mega upside for this is that we have 54 countries that form the continent in Africa, where banking is virtually non-existent. And
they use a lot of crypto in certain countries over there.
Yes, and what they mostly have are phones, and phones will be able to tap into this new tokenized world.
Right.
So then you can include and the word is inclusion. way more people than before in our global economy. It is estimated that just that alone can increase annual global GDP by about 10 trillion. So there's a lot of upside. There's also a lot of fear, and therefore people should prepare. So
I just want to say, I think the thing that I've experienced in my life is usually when a change comes, if we give up a certain level of privacy, you don't get it back. I mean, we've learned this through some of the stuff that we've seen with the FBI and the various police organizations in the United States. Some of the things they've done since 9/11, for instance, in the name of security, more or less eliminates privacy. So I can see the advantages. Thank you for sharing some of the advantages. I think it's going to take time for people to realize those advantages before they be comfortable giving up, their privacy, so to speak.
It's the age-old debate between freedom and security. So that's what it's going to come down to. Some people are willing to accept more risk and uncertainty and have freedom, and other people are like, no, I've seen this plane hit the tower, and therefore I don't want to ever get this again. Whatever they need to do, if they need to tap my phone, my email, my Skype, then where's the dotted line? I'll sign it.
Yes.
So it's always that debate, and if you're in the minority of that debate, then it sucks. So because it's overarching. So my point is to tell you that I think two things are important. One, education. So keep getting updates on this. And we certainly, with our free newsletter, we're going to update on any important event, including from the BIS and IMF, which don't get a lot of press. And those are two things that I follow closely and publish about. And secondly, after education, I think that you also need to figure out where you fit in. So, ideology is one thing, but also reality is another, right? If you want to live in today's world, you need to find the balance between your ideology and reality, because you can be an ideologist and have a very uncomfortable existence, or you can start to think about how to marry them into a comfortable. So education, and then insights and implementation. So those are the two things I think that people need to consider. It's ultimately out of your hands, and therefore that's what I'm saying. You need to compromise. Many things you take you are born into, and they're already a compromise on your value system.
Right.
So to just keep that in mind, that we have to compromise. Otherwise, we will always suffer from our ideology not getting accepted, and you can live an entire life like that. So some people may say, no, I would rather suffer and then give away to these globalists and elitists. Fine. Other people say, no, there's no right and wrong here. There's just how much level of discomfort you're willing to accept.
Right. Yep. And I think we've all, over the last few years, kind of gone through this with what happened over the last couple of years with the virus and people's right to choose, et cetera.
Exactly.
All across, not just in our country, in many countries, a lot of debates going on. And now, especially on the backside, holding potentially those accountable that were wrong. So, Lior, so what I'm grasping here, and we've gone pretty long into this video today, but just to recap once more, education. You can get free education down below. Check out the links. I'll have them in the video description section. That'll bring you up to speed on everything CBDC. You can learn about what's going on in the Middle East right now with Iran and much more with Wealth Research Group. We do these tag ups with Lior about every 3 months too. So be sure to check back and look for our next tag up here in the future. And then as far as interest rates, jobs, that's what we're going to be looking at. We're going to be looking at jobs. And we'll be looking at the DXY index. So I'll be definitely bringing updates to the channel on the DXY index so that we can, get a general idea how the dollar is performing, which really drives that spot price change in gold and silver. So, Lior, anything else you'd like to add for the audience today?
One more thing.
Yes, sir.
If you're already watching the DXY index once a day, also probably once a week, look at what's called the Fed Watch tool. It's from the CME group. Yeah, it's from the CME group, and it's essentially the probabilities of rate hikes and rate cuts going forward about 2 years. So that's a great way for you, because all of Wall Street does this, is a great way for you to understand market expectations about interest rates. And these are critical for, first of all, your real estate, because if rates are going to go down, that's really good for your mortgage payments.
It is.
Or if you're looking to purchase a home. And secondly, for your stock portfolio, obviously interest rates are like a weight on valuations.
Right.
And third, you need to know this, like interest rates are one of the essential barometers for the economy.
Yeah, for sure. I mean, I know people are actually making a little, I don't want to say making money, but they're getting something back from holding their cash in the financial system. And there are a lot of folks out there that just don't want to hold physical metals, and that's just best for them, just to get that little kickback each month in their money market accounts, certificates of deposit, or savings accounts. I'm not that guy. I like to keep my money moving and working for me. I try to keep a little bit in the, just to pay my bills and keep things going in the household. And everything else is working for me. But, different strokes for different folks. Thanks for the information, Lior. Really appreciate it. Once more, links down below. Thank you, Lior, for joining us today again. And I look forward to talking to you again soon in the future.
Thank you, sir.
All right. Have a great day, everybody.
Thank you for watching our video. I hope you subscribe to our YouTube channel.